absolute bloodbath out there right before the December break during periods of low volume. So very important time to be focused on the market. Most of the fear currently is coming from the stock market with another day down, wiping out massive gains. You're talking about trillions of dollars coming off of the table within the stock market. And a lot of people are fearful that this is going to now spread into crypto and create a much deeper bloodbath. So in today's show, we'll have a look at, how bad could things possibly get? Is this an opportunity still to be loading up, or is that absolute crazy talk? Should you be looking to exit the markets? Was this the shortest bull run that we've ever seen? We did actually address a whole lot of this in yesterday's show. If you do want to go through all those various different factors, I'm not going to repeat them again today. Please go and watch yesterday's show. Let's smash a like button, hit the bell notification, and subscribe to the channel, and we'll get straight into the show content. Now, no doubt there are still warning signs when you look at the current market conditions, and in the future, at least, when we do eventually put in a major top, you'll say that these signs were obviously there, right? When you're starting to see things like this. First up on the day, Altcoin, 20.26%. You literally can't make this up, right? So this is the current state of the market that we're in right now. There's a lot of things that we do need to get into. I'm going to first try and at least settle the emotions. Do I think that the crypto bull market is over? No, I do not. I do not think that the bull market is over. So let's just get that part out of the way. We'll get into some of the serious things, though. There are some real serious things that we do have to look at in today's show. And then we'll look at how deep the correction could go, how long it may potentially last, and what we can look at next for the cycle. You got to love this space. 75% up on Altcoin for the day, while we have trillions of dollars wiped out of course, the stock market. This space is absolutely hilarious. All right, fear and greed index for the stock market absolutely rinsed over here. 22, extreme fear. This does breed the environment where you couldn't get these very sharp snapbacks, right, towards the upside for the stock market. And we're seeing that simultaneously with, of course, a little bit of a spike up over here on the volatility index, that being the VIX, which shows the volatility that's actually in the stock market. Remember that the last major correction that we had actually occurred over here in August. It's where Bitcoin dropped down to $49,000. So don't for a second believe that crypto and the stock market are not correlated, because they are. We've seen every major correction that has occurred in the stock market, when it's a deep correction, does affect crypto, right? That's part of the reason why crypto is going down right now. So this is going to be one of the warning signals, that could signal things could get worse, right? If you do see a deeper drawdown within the stock market, we'll go over some of those levels in just a minute. Then, of course, that could affect crypto, right? We'll keep an eye out on the VIX over here. The last spike up that we had over there was the third highest, and that's where we said, this is your all-in signal for crypto, at least. All-in signal for Bitcoin of $49,000. And that proved to be an absolutely monumental buy, with prices cascading all the way up above $100,000, almost doubling from the buy entry. Not almost, actually more than doubling from that final buy entry over there. So going on to the actual stock market over here, well, you can see how it can actually start to look a little bit scary, because you have this face melting rally where, the volatility starts to decline, smaller swing moves, getting tighter and tighter into the trading range. And then as you start to break over there, you start to see the VIX spiking towards the upside, showing that, maybe this is just the start of the breakdown of the rising wedge formation, which is a traditionally bearish chart pattern. And if you do break down, well, you're hitting the first level of support right now at 5,900 on the S&P 500 futures chart. But how far down could you go? Well, your next major support is 3%. But I do want to remind you, the panic that set in already, with already a 3.6% drop. So if you do drop another 3% from this point over here, you could see even more extreme fear, right? Maybe this drops down into the 10 range, right? Somewhere into possibly even single digits over there. And then we need to evaluate, where's crypto in that environment? Where's Bitcoin in that environment? We'll have a look at that as well in today's show. Really, really important. You can see the NASDAQ over here as well. If that drops down to 500, that's your next major support. But then both the S&P 500 and the NASDAQ do have the 200-day moving average, which is currently rising. And that, at the very, very least, should result in a short-term bounce, right? So then you're going to see a bounce across the board within crypto. Dow Jones getting very, very close to the targeted level that we said at 41,000 over there. And we have Coinbase also coming back into the break of that trend line, right? So remember, we've seen the cup and handles across the board within crypto. It did play out in gold. It played out in the stock market, and they reached their ultimate targets. And then we started to see the same repeat patterns occurring within crypto. So that's the question, right? Will you still get the Santa rally? The Santa rally into the end of year that many people have come to talk about over the years. Will we get that once again? Well, theoretically, you are backtesting over here on the Coinbase chart directly into the neckline of the cup and handle that has been broken. So this is a critical area that must hold as support, right? It's really do or die for the bulls to step in now. If bulls do not step in, bears will take control, and that means we're probably going a lot lower, right? Especially into a low volume environment. So we'll go into crypto in just a minute. You can see over here, big liquidations once again, not as big as what we saw previously on the 9th of December. We had $1.7 billion worth of liquidations. This time around, we had just short of $1 billion worth of liquidations yesterday, right? So very, very important over there to keep an eye out on this, because this often does signify major turning points within the market, right? The long to short ratio is pretty balanced over there, nothing out of the ordinary. But as prices come into major support levels, while simultaneously you see these huge liquidations, that can often be a telltale sign that you're flushing the final players before the next actual move does take place. So in this instance, it could be a little bit of a bear trap, right? Getting people very, very bearish right before there is still opportunity for higher prices. The only thing that does concern me is I definitely would have liked to see, like the stock market has a major reset in the fear and greed index, have the same thing occur in crypto and Bitcoin, but we're yet to see that, right? I often wonder if these signals are broken, because it feels pretty fearful out there. If you look at the comments, you read the comments, read the room, you know, people are scared. And if you look at the fear and greed index for Bitcoin, well, it's sitting at 70 to 80, which is still greed, right? It's still in not extreme greed, but it's still in the greed zone over there. And this is what we've historically seen in terms of the color codes. You know, this has been historically near the tops, but we're still yet to put in the sustained periods of 90 to 100 on the fear and greed, and that's what creates those parabolic advancements. So the question is, are we situated somewhere around here where we're still going to get another move up? Well, if so, you would need to see the market snap back very quickly. You'd need to see the market reposition into extreme greed very, very quickly, and then obviously watch the ride. Now, I want to again just help to calm your nerves just a little bit with the current market conditions over here by taking a look at this chart. Remember, we did have an absolutely huge move up, and that occurred within this time period over here when Bitcoin was trading near the previous highs. Now, there's going to be a lot of altcoins that look very, very similar to this. Ethereum is one, right? So Ethereum is one. Ethereum has traded up towards this level over here. And if you saw the following candle, which is what ETH has essentially done, is clearing this level and now drop back into the trading range, well, that would be something that causes concern. Right? A lot of people will be scared in that environment. But what I do want to remind you is when you see an abnormally large candle over here, this is referred to as an inefficiency, and oftentimes price will come back to fill that inefficiency, whether now or later. But at some point in time, it will come back and fill the inefficiency. Now, if you fill back the inefficiency now as opposed to later, usually that oftentimes results in a buy the dip opportunity where you see something like that, right? So just simply fast forwarding this point in time over here, let's just quickly grab our replay function over there. You can see, so it looked like the breakout was happening, right? And then you start to print your fair value gap. So I'm just going to quickly highlight this and I'll show you the relevance of it in a minute. So there's your fair value gap. Remember, the inefficiency, also known as a fair value gap from the previous wick. Look at the body of the candle, look at the wick after the candle, and that is essentially your FVG, right? So there's your FVG over there. That area, we're looking to target somewhere around the mid-range of that FVG, so somewhere within this region over here. There we have it. And let's see what price does next, right? So stock market playing out something similar at that point in time. Remember, leading into August as what it's playing out now. Big spike in the VIX, and let's play it forward, right? Of course, you would have panicked, prices breaking back into the trading range following the cup and handle. That creates absolute mayhem. Are we losing this level? What exactly is going on? And as you can see, you get a deep flush, right? You hit the fair value gap over there, you create the 49K low, and the rest is history, right? Price obviously continues up over there, respecting that fair value gap forming a monthly higher low, and you have continuation higher. Why am I mentioning this? What is the relevance of this? Well, what happens if you're doing exactly the same thing again, right? So we can ultimately just move this up over here. You have an abnormally large candle, also known as a fair value gap, and consequently we can mark out from the wick low over there to the wick high over there, and this could be something that you can be looking out for in the coming weeks. Now, because this is a big move, it creates an absolutely massive fair value gap. Let's just see over here if we can mark out the midline over there. So we'll look at the midline, we'll make that nice and big for you, and let's make it solid. Therefore, that becomes a super strong area, right? The midline, $82,855. Keep that in mind, right? So I just showed you how it played out before. If basically prices do come back over here, this is probably going to still present an opportunity, right? So maybe over the coming months, you see chop like this. You see chop, you tag that 82K level, form the high low for the bull market to go higher. What does this mean? What does this mean for you at home? This means that it's maybe not a left translated cycle like many people had started to lean towards it being, but instead, if you have a earlier correction now, it just means a simple reset and a delay of the ultimate altcoin season that you're going to be looking for. Because remember, if Bitcoin is correcting, altcoins are going to have a tough time. Generally speaking, the altcoins go into their parabolic advancement when Bitcoin is nearing the end, right? Just like this period over here in 2021, just like this period, the last 2 to 3 months of the rise of Bitcoin, the parabolic advancement of Bitcoin is typically where your alt season tends to occur. So basically, I'd be looking for something like that, right? Where is the invalidation? Every trader, every investor, if they're good, should have an invalidation where they say, you know, they failed. The idea is incorrect and it's all over. Where is it all over? It's all over if you start to break below the candle low of November, right? Break below that candle low of November, it's over. That is $67,000, rounded up, $67,000. You lose that, it's over. Bull market over. Pack it up. We look for the lower highs and we start to short the market for the rest of the bear market. So your over level, it would look something like this. Drop down, spike up, set in your complacency bounce, lower high over there, testing some sort of underside resistance, and that is your over signal, which means you still have an opportunity basically to exit. And I don't think that's happening at all, right? Just to be clear, I think everything is playing out exactly according to plan because we actually have a roadmap of what happened in the previous cycle. So to calm your nerves, are you diamond-handed or spinach hands? Let me know. You know, veganism is not popular these days. So I hope that you're diamond hand steak eater and not spinach hands, because we're currently following exactly according to plan, right? A little bit of a dip, just like we saw in the prior part of the cycle. Literally timing-wise, you can look at that. It's almost exactly the same, right? So you could have a little bit of a, you know, a little bit of a low volume period, a little bit of apathy leading into December period. And then when you come back into January, well, we expect fireworks because that's what we've previously seen in the post-halving year. Now, a lot of people are making comparisons to what occurred, you know, in 2017 and 2021. But the difference between this year and 2017 and 2021 is that this is a halving year, right? We're in the halving year. 2017 and 2021 was a post-halving year, and that is where you expect the market cycle tops to occur, which would be 2025. 2025 is your post-halving year. This year is the halving year, and we're looking for the top in the post-halving year, right? So if you look over here in terms of Ethereum, we know Ethereum is going to be putting in its best performance during, if we look at the quarterly returns, best performance for Ethereum occurs in Q1, right? 92.75% on average, with the post-halving year being the most phenomenal gainers, 518% in 2017. That would be your post-halving year, equivalent to what 2025 would be. 2021 would be your post-halving year with 160% gainer for Ethereum. That would be like sending Ethereum at the very least to $10,000 if you play out the shorter side or the lower return on investment, that being 160%. So do I think you should be shaken out the market yet? Absolutely not. Do I think that you should manage your risk accordingly and not touch leverage? Absolutely. I don't think that any of you should be high leverage traders at this point in time within the market cycle. You do need to be careful and cautious as things do play out. Speaking of which, we will be doing a giveaway as well. If you do want to stay in tune with what's happening within the market, remember, we will be updating everybody in Whale Room, which is the private Discord. I'm going to be giving away 10 free memberships. All you have to do is you have to go follow me on my socials over here. There is a link that's in the description below. Go through to the host channel over here. Follow me on Twitter or X. Follow me on Instagram. The links are over there. During the vacation period, because this is actually going to be one of my last shows, right? This is the final live show that we have. I might do one tomorrow morning. And then after that, we're on vacation, right? So if you do want to stay tuned with the markets, I might do a couple of updates as well on Instagram. Go and follow me on Instagram. Through Instagram, I'm going to be doing the giveaway. Watch the story over here for the full details. We're going to give away Whale Room memberships to those of you who go through over there and follow me. Okay, continuing on over here. So we expect seasonality-wise, we should still have a very good time period, at least for Ethereum. So what are the percentage chances right now that the bull run is over? You may ask. Okay, this is kind of sticking my neck out on the line over here. What are the chances that the bull run is over? And that's at the top is in. I'm going to give it a 3 to 5% chance. 3 to 5% chance. That's not a zero chance. There's always a chance, but 3 to 5% chance, I believe, that the bull run is over, which leaves you with about a 95 to a 97% chance that the bull run is going to continue, and we are going to go much, much higher. Quickly going back onto the high time frame charts, which is the monthly, I also do want to just showcase what Ethereum looks like over here. So Ethereum has, of course, been slightly lagging Bitcoin, as it always does, cyclically, with the return on investment. This is exactly what you expect. You expect that only once Bitcoin gets into that end phase game, basically the last 1/3 of the cycle, which is right about the time period that we're entering into now, that you see Ethereum and altcoins begin to outperform. So going back to this chart over here, I want to showcase to you on a 3-month scale what Ethereum looks like right now. So let's go into a 3-month chart over there. There it is. There is your 3-month chart. As soon as ETH closes any high time frame candles, above this level over here, we'll make that nice and big. Where is everything over there? There we have it. Let's just make that nice and big for you. So as soon as you close above that line, around $3,700, you're going to start to get a pretty big move. On the low time frames, as soon as you close about $4,000, you are going to get a big move, and you would expect that it should play out similar to what Bitcoin has done. So if you look at the ETH chart, this is what it looks like. Now keep that image in mind and have a look at the Bitcoin chart, right? Bitcoin already had that move. Bitcoin already closed above some of its key levels, and essentially we're looking for ETH to do something similar and play catch up. And I still believe that's going to be the case, right? So I hope that calms your nerves just a little bit, but you do have to understand that, of course, there are some real warning signs, right? Firstly, we don't want to see Bitcoin dominance continue to climb towards the upside. If we somehow play out a very, very quick pump, which is often the case within these bull runs, you can see crazy things happen. Previous cycles, we saw a little bit of a slow December, and then leading into January, when the Fed switched from QT, quantitative tightening, into QE, which is quantitative easing, we saw massive price appreciations, right? In order for that to happen, we'll need to see a rejection over here from the Bitcoin dominance. Bitcoin dominance right now is sitting at the 0.618 fib extension level, or fib retracement level, your yellow box, right? That is your first area where you expect to see a potential stop and reversal. Now, if you do blast past this, your next stop and reversal target is going to be the 0.786, which is coming in at about at about 60.4%, right? So the 786, 60.4% on the Bitcoin dominance. And if you can set in a lower high over there, you have the opportunity to drop this a lot lower. If you drop this a lot lower, that should bring new money into the market, especially the altcoin sector. And that's where you might see that major rotational shift going from Bitcoin and the gains that most people have had in Bitcoin into alts. This only happens during a period of greed where the market feels that everything is fine and healthy. So we need to reclaim some key levels. We'll talk about what that looks like on the BTC USD daily chart in just a minute. Now, the other chart that's going up, which we don't want to see going up, is, of course, the USDT dominance. Now, your best case scenario over here is that you're creating a trap-like scenario, and this is simply a deviation. Remember, when you trade the market, you trade it like a trading range, because markets range more than they trend, right? Which means if this is your range, we can change this into support. We have the yellow box on the bottom. It's going to be your support level. We have the yellow box at the top as your resistance level. Then ultimately, what you definitely want to see over here is some sort of a deviation, right? So as you failed the top side of the trading range and you broke inside, attempted back up, broke back down. As this goes down, you see money flowing out of Tether. This is the USDT, so the Tether dominance. Remember, if Tether has less dominance, it means less people are holding Tether. They want to push the Tether off their hands and they're moving it into the crypto sector, which creates the pumps, right? If this is going up, it means people are fearful and they're selling out of the crypto market. And with a flight to safety, which is stable coins, Tether being the biggest stable coin in the crypto market. So we got this over here. Bounced to the top, deviated the top, came back to the bottom, bounced off the bottom, came back to the top. Ultimately, what you really want to see is a deviation now, and you want to see this break back down. If you can get that, that will keep the hope alive, and that's where you might see high lows start to form and prices trending back up, right? So as it currently stands, the fact that it has broken this downsloping trend line, the fact that it has reclaimed the resistance level over here, and it could be flipping that into support, is definitely the biggest warning sign. This is your number one warning sign, even more so than what you're seeing in the stock market, because it's relevant and native to us as crypto people, right? If this trends towards the upside, if this holds over here and bounces, this is going to create major tops within the crypto market. And then you can expect a longer consolidation or correction, which may go on for months. You may go into a 3-month correction before reaccumulating and later on playing out the rest of the cycle as per our little ROI schedule that we have over here, right? So the corrective phase that we played in the orange line over here, which is simply your 2017 cycle, you know, it doesn't look like much on the chart, but these are major, major corrections that last for many, many days, months at a time, sometimes anywhere between 1 and 3 months before leading into the next move. That would mean that we may be playing that out now. I was only scheduling this in for potentially around March, but it could be that this is the start of the correction. The only way we're going to know for certain is when we wait for confirmation on the daily and the weekly closes, most specifically to see how this weekly candle closes. Then we'll know what to expect next, right? We saw the same thing occurring over here, of course, on the green line over here, which was your 2021 cycle. You can see, you know, Bitcoin rallied all the way up over here, and then it went through a massive correction. So day 750, and it corrected for about 25 days. So just short of a month, found a major bottom, and then you can see it rallied up, right? And then we went through a prolonged consolidation, essentially setting in a major top, right? That was basically the top of the cycle. Bitcoin topped in the green at about 65K, flash crashed all the way back down, leading into, I think it was June 2021. And then it ripped one more time, crossing 69K briefly and then dropping once again. So we have to pay a lot of attention. Very, very important time within the market again to get an update on what happens next. Guys, please make sure, follow me on Instagram. I'm going to upload videos over here. I'm going to use my mobile device and I'll just do quick recordings, like 5-minute updates for you guys during the vacation period. Okay. Another thing that we're looking at over here is the daily exchange volume, which you can see a minor tick towards the upside. So if bulls can step in, new volume can come in, and new buyers can step into the market defending this level, this will be a very, very important zone, right? So between 75 and $100 billion mark, that is the level that you want to flip into support, and you want to catapult this thing higher, right? Remember, we're still waiting to take our 2021 highs, and I firmly believe that we should see that, right? So until we see that, I wouldn't be wanting to call for the end of the bull market just yet. It's super important that we do start to take out some of those levels. Now, looking at Bitcoin with the actual price chart, which is one of the most important things, you can see there's a lot of fear in the market, but unbelievably, this is hardly anything, right? In terms of a drawdown, price has only come down about 11-12% on the week, which is not much, right? How much further can it go? Well, your major support is coming down into this region over here. You got your 21 weekly exponential moving average. You have your stop and reversal indicator, which lines up exactly to the tick in alignment with that. And on top of that, you have your 50% level of the trading range. Remember, we use our Fibonacci tools and we measure the broader range, which would be from that 49K low that occurred in August to the absolute top over here. And when you measure that out, it lines up over here with your 50% level, which is very, very significant zone, being exactly in line with the 21 EMA and the stop and reversal indicator. So strong invalidation or major warning sign is if you start to break that level, right? So price could easily drop from here if the the dailies and everything start to move towards the downtrend, into a downtrend. You could easily drop down another 18-19%. So you have to be able to withstand that type of volatility. Remember, this is still nothing because we've seen in bull markets before. So this would be maybe one of our biggest drops if we did play that out. You're looking still not even. Our biggest drops, I think this cycle that we had was in the region of about 36-ish%, somewhere around there. This would be 26%. We've seen prior cycles with drops in the region of 50% on Bitcoin, right? Which means altcoins do 80% from the highs, especially if you're in low market cap coins. So anyway, major support coming down into this region over here. Expect that if you do hit that level, that is going to be your next major high low. So going back to what I showed you on the monthly chart, using the fair value gap, and we showcase how Bitcoin came back into that key level. If you played out something similar, it would be this, right? This would be your major high low, and then you're looking for the next move up. Now, I will warn you that the next move up after this high low is probably where you top, right? So that's going to be your high low. If you hit that level, I'm not even saying you're going to make it to that level. If you hit that level and you put in a high low over here, this next move is I'm 90% sure going to be your ultimate top, and that's where you want to be selling, right? Ignore the price levels that I've just given over here. How high could this go? In terms of an Elliott wave count, you would essentially be coming into finally, let me actually do this. Let me do you guys a favor. Let's pull up the Discord, the Whale Room Discord, because this is such important times. I do want to share this with everybody, even if you're not in Whale Room. We'll go back to Captain's Take over here and just showcase what I'm looking at. So in terms of, here we go. All right, this is what I'm going to be looking at, right? I believe that if we do set in a major top over here, we're setting in the green area, which is going to be number 3, right? So you're looking at an Elliott wave. This would have been the cycle lows, which would have been about $16,000, $15,500, whatever we bottomed at, right? We had a big move up over here. You set in the top at 0.1. You came down. This is your USDC.D peg at point number 2. That is where Bitcoin went to about $19,200. Then you rallied all the way up over here. You set in another local top 0.3. You came down. This is your cycle low or your last higher low. That is $49,000 in August. That is point number 4. And now we're busy with the big move from point number 4 to 0.5. But remember, you get smaller Elliott wave counts within that broader count. So we went from into 1, 2, 3. And if this is the start of the big correction from 0.3 to 0.4, this next higher low is going to be your last high low that leads from 0.4 to 5, which is the smaller count of 4 to 5, which lines up with your bigger count from 4 to 5. And basically what I'm saying is that would be the end of the cycle, right? This 4 to 5 would be the end of the cycle. Now, how high could that go? Remember, 0.4 to 5 can last a very, very long time, right? You would expect extreme bullish euphoria. You would expect that nobody believes that the market is ever going to top. Governments are adopting Bitcoin across the board. These are the types of signs and symptoms that you're looking for. But ultimately, you can look at things like volatility indicators. How heated is the Bollinger Band width percentile in terms of extreme reads? We can look at various different other factors, some of which is going to be this one over here. So we'll look at things like this. What is our short-term bubble risk, right? If we start to red line on the short-term bubble risk, that is a little bit of a warning sign that we're nearing the end, right? I'll come back onto that chart in a minute. The only thing that you can say for certain is that once you confirm the high low and you take out the previous high, you can now label that as 0.4. And you can say we've completed 0.4 and we're in wave 5 of 5, the very second that you cross those prior highs, which means that I become a seller from this point onwards and I scale out all the way up. How high does it go? It can run to $200,000. That's a possibility, right? But all you need to understand is the risk involved. Once you clear out those previous highs, which we just set in at $108,000, This only plays out if you do actually come all the way down to the bottom over here. Otherwise, if you don't, well, that means that going back onto the Discord over here, we're still in this number 3, right? We're still waiting for number 3 to be confirmed. We only know number 3 is confirmed when you actually have a local top that's confirmed on Bitcoin. And the only way you have a local top confirmed on Bitcoin is to take out some of the previous high lows, right? Otherwise, you're still in a trend in motion and you're still transitioning from phase 4 into this phase 3, right? Or you're in the broader phase 4. If you want more info on that, again, guys, go into Whale Room. Everything is over there because it's a little bit difficult to explain this in detail on a quick stream that I wasn't planning to integrate that with. Okay, so looking at this over here, I just want to highlight, we're back into the low risk environment. So according to this model over here, you're looking to do your major buys within the market during periods of dark blue. So let's just put that back on the screen. Dark blue over there, those are your bear market lows. Let's add it on over there. So dark blue is your bear market lows, 0.75 to 1. You want to make your buys. And then when you come into the 1.25 to 1.5, it's business as usual. You don't buy, you don't sell, you just sit on your hands and you hold your positions and you wait to start to get the extreme reads, which are going to be the 1.75s to 2s. And if you're lucky enough to get over 2, you don't always get it. That is where you're looking to exit the market. That is the screaming sell signal. So the point is, we haven't seen that yet, right? We haven't seen that at all. We briefly had, I don't actually think we've even had in this cycle. Let's just zoom in over here. Let's remove all of that. We haven't even had 1.75 to 2 within this particular part of the cycle yet. So is the cycle over? Would this be the first cycle ever that we never put in a 1.75 to 2 on the short-term bubble risk metric? I doubt it. Remember, the short-term bubble risk metric considers various different factors. It uses a whole bunch of stuff, YouTube views, overextensions from the mean. There's a whole lot of different things that you're looking at over there, and we haven't got to that point yet, right? So as it currently stands, Bitcoin is still in an uptrend, believe it or not, despite the fear, despite the flush. There it is. The white lines are your high lows, high low, high low, high low, high low. Yes, you're starting to lose those EMAs. You are below the yellow line, which is your pivot level at 103,891. That's a key level to reclaim, to shift everything back up. You had your bearish divergence playing out over here, but you have your RSI now back testing into the white line, which is going to be your 50% level, right? Previously, what we've seen is when you test this 50% level, just the way that it works on price tends to work as well on momentum oscillators or the RSIs, right? So hitting that level, you could expect a short-term bounce. I haven't marked it out on this particular chart, but you can actually go back and you can have a look. It has led to plenty of the previous bounces, right? So there it is. You're hitting that 50% level, you bounce. You hit the 50% level and you bounce. So the question is, hitting this level over here, will we see a sharp move out of here? It's possible. It's very, very possible. So again, that's why I don't think now is the time to necessarily exit all positions. Just giving you some extra levels of confidence. If you do break this structure down in terms of the high lows, your next major support levels are going to be as follows. I dropped this all in the Discord as well. First and foremost, $90,000, right? After $90,000, if you lose that level, you're looking at $85,000, which is your 0.382. That is your bull fib, the Fibonacci level where bulls typically step in bull markets. And if you lose that level, well, then your super strong support is coming in at $78,000. Now, that is also where your CME futures gap is, right? So there it is, $78,000 coming into the gap over here. Gaps often get filled, but they won't necessarily get filled until after the bull market has topped, right? So no guarantee that you get that. But nevertheless, level to level, that is one of the levels that you're going to be looking at. We have already broken down on the 4-hour trend with multiple candles closing below this upsloping channel, which increases the likeliness that you are actually going to play out some of these lower zones, right? So we need to wait for closing candles to be absolutely sure. Now, what I will tell you is there's always a way that you can de-risk within the market. And there's ways that you can de-risk without actually selling your spot positions, right? Your spot positions are the underlying assets or coins that you're holding, like Bitcoin, Ethereum, Solana, etc. This is just a little bit of a deeper explanation for some of the new people that don't know the difference between spot trading and leverage trading or perpetual contracts, right? So you don't necessarily have to sell all of your spot. You can remain in the position in the event that, you get a sharp reaction out, and we are still playing out wave 4 to 5, and you basically don't want to risk being left behind, right? The way to do that is through options trading. Now, tomorrow, we're going to have a specialist coming onto the show with me. I'm just not sure if we're going to record it today. I'll find that out later, or if I'm going to do it live. But either way, these are going to be longer term strategies. Tune in for tomorrow's show. Options trading will give you the option of not selling all of your spot assets, but still covering the risk in the event that prices do crash much lower. You can cover a lot of those, that downside, right? That downside risk by taking out options contracts. This is with 𝗕𝗬𝗕𝗓. There is a link in the description below. I recommend that you at least have your account ready for tomorrow, because depending on how many people are actually going to take out these options from the live show, they're going to change in price, right? They become more expensive with more demand, right? So ultimately, get your account ready if you do want to participate. The links are in the description below. That's tomorrow's show. That's going to basically be my last show of the year, right? Okay, weekly in terms of the funding rate, it's coming down a lot. This is actually a healthy sign. A bit of a flasher, even better sign is in a bull market when you see negative funding. We haven't seen negative funding yet, right? The last time that we saw negative funding was actually on that 49K drop where Bitcoin went down to 49K and the VIX spiked up over here on this candle and the S&P 500 dropped. That was actually the last time that we saw something like that. So there it was. And you can see the drop is actually small on the S&P 500, right? So we could be playing out something similar over there, but still no negative funding. If you get negative funding in a bull market, that is a screaming buy, right? Looking at ETH BTC, dropping all the way back down, right? So the reaccumulation at the bottom of the trading range continues over here. ETH obviously getting smashed towards the downside, but coming theoretically into what needs to be support. You need to flip this level into support. Failure to do that, of course, does open up the possibility of going lower. We can have a look at some of the other time frames to determine that. Let's look at the others chart, which is kind of an index for the rest of the altcoins as opposed to looking at every altcoin independently, right? You can see big cup and handle formation. Perfect, textbook perfect. I don't think there's anyone that can argue with this, right? Let me know in the comments. Does anyone disagree with the validity of this cup and handle formation, right? You got the big cup, you got the handle, textbook perfect. Go and look at what a cup and handle formation looks like. It's perfect, right? You get a throwback into the neckline over there. So very, very important level over here that needs to hold. You need to see buyers step in immediately. Remember, when chart patterns fail, they fail in a massive way. That's another important thing to remember. So if this does fail and come down, you could easily trade all the way back down to the bottom of the trading range, which is why it's important to manage your risk. So looking at this level over here, it's very important that we see what happens with the weekly close. Now, I just want to zoom in. I drew this as, conservatively as I possibly could. We can probably tighten that up a little bit. The aim is to not breach any of the bodies of the candle like that, right? So we're going from wicks through the body of those candles into this candle over here. And you can see you do have a perfect test into that level. So if demand starts to step in, you can say chances are that this was a bit of a flush. It will take time, right? Following a huge move like this, you can expect this to chop around a little bit. Other charts that might give you a better indication is going to be something like Ethereum, which again, textbook wise is a perfect cup and handle formation. Same thing. I drew it as perfectly as I could. It broke the neckline over there. You can see coming back into that trend line, testing it as support, but zooming in over here, you might notice the yellow box. Similar to what I showed you on the prior chart, this is essentially your fair value gap, right? Why? How do we get this level? Well, you have a big abnormal candle, okay? You look at the previous wick, there it is. You look at the following wick, there it is. And that's where you get your levels, right? You get your level over there. You currently have filled this fair value gap or simultaneously back testing that trend line. If you start to see demand come here and close back above this trading range, that will be the first very, very healthy sign that, maybe this was just a final flush before the next move up. And ultimately, bulls are taking back control. So I'm looking at that on Ethereum on Solana specifically, since it's one of my biggest altcoin positions. I am paying a lot of attention to this particular chart. To give you another perspective over here, you have come back into your previous range high. when you have a big breakout, you don't want to lose that level. It's okay to come back and test the range high, but now you want to see this play out. You want to see support found, right? If you do lose that level, you still have EMA support just below that. But I wouldn't want to see that, right? I wouldn't want to see prices come much lower than what they currently are for Solana specifically. You definitely want to see it bounce from this level, and you want to see the high-low form. Remember, in terms of your overall trend, trends are made up of high highs and high lows. So you have your last major high low, you have your high, and therefore anywhere around here, even if you get a wick or two that runs through, you want to see that high-low form and then have prices rallying up. Okay, if you lose that level and you break back into the trading range, we have to look towards the mid-range. So I may as well just give you the levels now while we're at it, since it's going to be vacation time. And I'm not sure that all of you are going to go and follow me on Instagram where I'll be doing the updates. But nevertheless, this is the zones, right? Here it is. Here's your 50% level. This would therefore become your next major support, which is going to be $157, right? So if you don't hold the top of the trading range, expect Solana will go to $157. But when I look at the daily time frame and we look at the range low, the ultimate range low of this move to the range high, our 50% level, we have tested exactly on the nose, right? Tested it to perfection. So again, you don't want to spend time underneath that. You've held that. You are starting to show signs of strength over there. And that is confluent with the fair value gap on the weekly, as well as the back test into this trend line. So there is tons of confluence coming into this area over here. So keep an eye out on that, right? Sol is holding support, right? As per the comments over there, Sol is holding support, but only for now, right? Only just a very, very important level to hold over there specifically for Solana. So we can have a look at some of the other coins. One of the other coins that we've been trading, obviously, which is coming down now, a little bit of profit taking, but still a very good looking chart, is Goku, right? Goku has now been listed on a Sendex, right? So if you want those low cap degen plays, I mean, Goku's still doing well. In terms of where Whale Room got in at just under $1 million market cap, so still up 13x, but profit taking. If you missed out on this, I expect support to be found over here on Goku, 0.0093 to 0.0080. Those are the areas of interest. That's what we're looking at over there. Okay. Look, guys, I know everyone wants their chart request to be taken. I'm not 100% sure we're going to have time for that today because the charts are all going to look very, very similar, right? Look to the majors, look to things like Solana, look to Bitcoin, look to Ethereum. Whatever they're going to do, your favorite altcoin is going to do, with more volatility in it, right? So let's just quickly have a look over here at ETH and just tally up some of these levels over here. Let's give you something more precise to work with. So just looking from the ultimate range low to the range high, and let's zoom in. Okay, so these are your key levels. 50% level right now is coming in at 3,127. So very, very important zone. That is also where the little order block that led to this initial move up happened. You definitely don't want to see price breaking and holding below that order block. There are a lot of coins, that are breaking down their mid ranges. So they have potential backtests into the zone. If you can't get back above the mid range on near, expect to move down to 291. What else can we look at in terms of these trades over here? Okay, mid-range lost on injective. That means possible move back down to the range lows. Okay, Casper, probably the same, right? Range lows, 10 cents. If it lost the 14 cents level, 10 cents is your next potential target. Phantom, okay, lost the range high over there. So you need to look at the overall trading range. There we go. So the overall trading range, you have supported 86 cents. But I'd also want to look at this, the clear obvious range and the mid-range of that, which I'm going to put in a second. That is going to be, there we go. So this is your key point, right? For Phantom. That's where you want to see support found on Phantom, coming in very, very close. So sweeping out a lot of those stops over there. Ton, also range low. On Ton, you're probably going back down to range low. It's going to be $4.80. What else in the L1 should we have a look at over here? Anything else to look at? Let's see Sui. How's Sui holding up? Okay, it's still doing okay. Yellow line is going to be support over there, $3.78. Let's see if it holds that. What else? Let's see. Mantra, still strong, right? Mantra still doing very, very well. Huge move up. This has actually been one of the top trades that I've got into. C-Pool in terms of real world assets, you can see a lot of them still holding up. That's doing well. Checks still holding up, right? It's not even below last week's low, still doing well, right? If you're above last week's low, your coin is probably still showing quite a lot of strength relative to the rest of the market. Quickly scanning through this over here in terms of AI, anything worth mentioning in this sector. Let's see, memes. Let's quickly have a look at some of the larger cap memes. So Bonk losing the top side of the trading range, obviously not a good sign. Remember, we can go level to level. So that is going to be ultimately a range low. In terms of this trading range, you're probably going to hit this mid-level. So a little bit lower on Bonk. Popcat, this one got absolutely hammered. I don't know what's going on over here if big players are exiting their position massively, but this was the key zone, right? This was the key zone to hold. You don't want to hold any candles or close any candles below this. And so far, it looks like that's probably going to happen. So not looking good on Popcat. This may change the whole trajectory of this coin because the next bounce that you get, it may do something like this, set in a lower high. If that does happen, that's probably going to be a point where you're going to have to exit. And then this goes through a long-term correction over there. Let's see WIF. Okay, so WIF still holding that key level. This is your upsloping trend line. You can see from those previous lows over there. It also lines up with your range quarterly. Remember, you got your range high, you got your mid-range, and you got your range low. And the middle point of that range is coming in exactly where price is right now. So a little bit of confluence over there on WIF. Let's see Brett. Okay, Brett's also deviating the top side of the trading range. But still probably going to find support over here at, if it comes as low as 1136 is going to be the main level I'd be looking at. All right, GigaChad, how's GigaChad doing? Giving up a lot of the gains, but much healthier than Popcat. If you compare GigaChad to Popcat, Popcat is basically trading down here, which is shocking, right? This is your key strong support. You don't want to take out those wicks that occurred on the left-hand side on GigaChad. Pepe. Okay, also breaking below the trading range, deviation similar. This is going to do whatever Ethereum does. Pepe is a higher beta play than ETH. So look, if you're building the position into the triangle, like we said, bigger orders at the bottom, smaller orders at the top over here, permitting into the position. I wouldn't close the position out yet. I would wait for the weekly candle close, because what you may see is you may see this close back up over here like that. If it closes back up, you'll be instantly in profit. If it closes down here, then the next week's candle is probably going to have follow through to low prices, at which point you can stop out of this trade. So for anyone that was, looking at that trade previously. Okay, what other memes over here should we have a look at? Anything else? Let's see Mog. Okay, Mog, one of the stronger ones out there, coming back to the range breakout level, now testing and holding that as support. Big level, important level. You want to see that high low start to form over here and price to move up. If it doesn't, expect that this is going to move down to last four digits, about 1400, right? Or the last four digits. Okay, what else? What else? Did we do Brett? I see there are questions around Brett. Let's go to Brett. Yeah, we did do Brett. We did Brett as well. So I think I've covered most of the memes. Let's see how Doge is doing on the weekly. So massive drawdown over here on Doge. Also big position. You almost got to those previous highs over there. Strong support for Doge is going to be coming in here. You can see previous underside resistance over here, previous top over there. 22 cents for Dogecoin. All right, anything else in the comments? Let me know in the comments. Yes, we can go to AVAX. There's someone that wants the AVAX chart. Big level to lose over here. Ultimately, I wouldn't get long on AVAX unless it can start to reclaim the mid-range, which is 40 cents, right? So if you're already long on this, a weekly close under 40 cents, I'd start to close, or under, $40, sorry, not 40 cents. A weekly close under $40, I'd start to close this position. If it can reclaim $40 over here, and more specifically get back above the downsloping trend line, which for next week would be about $45, that would be giving you a little bit of hopium, right? Then it has a chance of survival. So probably with most of the coins, you're just going to wait for that weekly close. But guys, very important, please go follow me over here on Instagram. This is where I'm going to be doing the updates. Don't let anyone DM you and scam you. Don't give your money to anyone. There's a lot of scammers that are out there. The links are in the description below over here, specifically for my channels, both Twitter and Instagram. And then if you did want to join Whale Room and you don't win the giveaway today, this is your last day to join Whale Room. From tomorrow, it's going to be closed, right? We're closing it completely. You will not be able to enter. You'll have to go onto a waiting list for whenever we decide to open it again. So there is Whale Room over there if you do want to sign up. And then remember, I'm going to do the giveaway later on today. For those of you who do follow me over there on Instagram, we'll use Instagram to do that giveaway. Just look at what the story says. Okay, Sol coming down. Again, guys, keep an eye out on this level, right? This 187 for Solana specifically. All right. Thank you so much all for watching. I'll catch all of you on tomorrow's show, whether it's going to be pre-recorded later tonight or live tomorrow. It's still going to be relevant for how to hedge your positions using options trades. I'll see you all then. Have a great day, everybody, and a great holiday. If I don't catch you on any of the other lives tomorrow, I'll see you all on my socials. Have a great time. Have a great vacation. Relax. Spend time with family and friends, and I'll see you guys later. Cheers for now.